All right, so let's go ahead and get started. Hi, Titans. Thank you for joining us today for our Understanding Credit webinar. My name is Lupe Tinoco Oliveros, and I am the Programming Graduate Assistant for Tuffy's Basic Needs. And today I'm going to be delivering a presentation, and then we'll have time at the end for any questions. You're actually able to submit any anonymous questions into the chat at any time during the presentation. Just make sure that they're going directly to Tuffy's Basic Needs. Also, I want to let you know that the webinar is being recorded and it will be posted to Tuffy's Basic Needs website and also our YouTube channel, and it'll be accessible for later view. And we do ask that you please keep yourself muted throughout the presentation. So without further ado, let's go ahead and get started. So today I'm going to be going over what is credit, and then followed with credit scores, some best practices or characteristics of responsible credit ownership, how to get your first credit card, what's kind of touching base on things to look for, and then some resources, and then we'll have our moderated Q&A at the end. Also, a disclaimer, I am not a financial advisor or an expert in this topic. A lot of the things that I have learned have been from experience through my own trial and errors. Also, my mom having to sit down with me and explain what credit is and just doing my own research. Therefore, this presentation does contain general information about credit that might be valuable for first-time credit users. Okay, so what is credit? Typically when I think about credit, I immediately go to credit cards, right? But it's a little bit more than that. So credit is money that is borrowed. It's generally you're borrowing from a financial lender like a bank or a creditor. It's a little bit different than borrowing money from like a sibling or a family member, right? Also, it must be paid back with interest. Unfortunately, borrowing isn't free, and there will be a percentage charged of however much you are borrowing. This is what folks often refer to as an interest rate, right? For example, if I borrow $100 and they charge me a 15% increase, in the end, I'm going to be having to pay $115 back. So it's that fee associated with being able to borrow that money. Also, overall, it's your reputation for borrowing and paying back money, or how much lenders are willing to trust you with their money. All right, so why start now? So generally, it takes around 2 to 3 years, or maybe even more, to build a solid credit history. And information stays on there for 7 to 10 years. We're going to be talking a little bit more in depth about this, but generally the longer your credit account is open, the more points you get. So now might be a good time to be thinking about building credit. It's just kind of one of those adult things that might not seem so beneficial now, right? But they might be beneficial for our future selves. And also, if you have a constant money flow, right, you're buying you're buying food, you're buying school supplies, you're buying basic necessities. This could be used to one's advantage and using credit to buy those purchases. So I do want to take a moment to pause and talk a little bit about credit debt. I do want to recognize that credit debt is real, right, and it's out there. This quote comes directly from an article I read, but it's based on Sallie Mae's 2019 Majoring in Money report, that the average credit card debt for college students is around $1,183. And that's a 31% increase from the 2016 report. So we can see that there's a steady increase. Also, recent college grads owe nearly twice as much, around $2,351, and former students have an even more credit card debt. This is only looking at credit cards, right? We're not counting student loans or other types of debts. For example, some students might have taken out a car. So I do want to say that this presentation isn't to persuade anyone or encourage anybody to take out credit card or car. My purpose is more to inform and to increase our financial literacy on credit, how to build it, and how to use it responsibly. All right, so let's go ahead and talk about credit scores. So Your credit score is a measure of your financial health. As mentioned previously, your credit tells others how reliable and responsible you are with money. And this indicator can mean a lot of different things. But before we get into that, I want to talk about how credit is built. So there are 5 main categories that determine somebody's credit score. The primary one is payment history. That makes up 35% of somebody's credit score. So consistently paying creditors on time is the most important factor in determining somebody's credit score. Even one missed payment can have a noticeable impact. Also, they take into consideration the number of accounts with missed payments for 7 years. So those missed payments can stay on there for a really long time. Yeah, so the next one is amount owed. That makes up about 30% of somebody's credit score. This is basically the credit, how much credit is available versus the balance on revolving account, or basically how much you owe. So how much is credit available versus how much you owe. A rule of thumb here is to keep borrowing under 30% of however much you've been lended. For example, if I'm giving a credit limit of $100, the max that that's the max that I can spend, right? This is what usually considered as a credit limit. I'm only going to want to refrain from using about 30% or $30 so that I could keep a good score and not have that impacted negatively. Also, the length of history, which makes up about 15% of one's credit score. I kind of touched upon this earlier, but generally, the longer that you have credit open, the better. However long your accounts have been open really determines that strength, that length of history. And having a few credit accounts, even if it's one, is better than having none at all. Fourth is the type of credit. So creditors want to know if you can responsibly manage a mix of credit types, such as an auto loan, credit card loans, or student loans. Those are a variety of different credits. And lastly, credit inquiries. So how often is your credit run? And I do want to make a little note here about soft inquiries versus hard inquiries. So soft inquiries are like background checks, if you're getting an insurance quote, or just checking your own personal credit score on your own. This doesn't have a negative impact on your credit. What does have an impact, or what can impact your credit, are hard inquiries. So this is when a financial institution, such as a lender or a bank, right, checks your credit to make a lending decision or to determine if they are going to provide you with more credit. Those hard inquiries can negatively impact your credit score if they're done in very short periods of time. So we definitely want to be considerate of that. All right, so what does this all mean? What are these numbers? So as you can see on this chart, generally a higher credit score is desired. A higher credit score means that you're probably more likely to get approved for any type of credit that you apply. You'll also probably get lower interest rates, and you'll have higher credit limits. On the opposite side of that, a lower credit score means that you might not be easily approved for different types of credit. You might have higher interest rates, have lower credit limits, and sometimes you might even have to add a cosigner who does have a higher credit score, or you might even have to put down a deposit or a payment fee for borrowing some of that credit. Generally, folks try to aim to be in the 670s or above. That is definitely kind of where the range where most people want to be, but obviously the higher the better. All right, so now that you know what credit is, how it's used, how credit score is determined, and a goal of where you want to be, let's dive into some best practices. So first of all, checking your credit. By law, you are entitled to a free credit report from the 3 major credit reporting agencies at least once a year, which means that you can technically check your score about every 4 months. And you can access that from these three websites. There's many more websites, but these are some of the more reliable ones. Also, because of COVID, those three lending agents or credit reporting agencies are offering free weekly online reports until April 2021. So just thought I'd add that in there. You can check, as I mentioned, your score as often as you like. Checking your own credit score is a soft inquiry, so it does not have any negative impact on your credit scores. And also, many banks have began to make your FICO credit score a free feature when you do take out a credit score, which is really nice that they provide those for free, right? And you can usually, if you have notifications on your phone, if you're using the app, you can get notifications every time that your credit score is updated. That's a feature that I use. All right, so these are some things that I have already gone over, but it doesn't hurt to repeat them again, right? So the first one is to only charge what you have money for. Start by using your card or your credit as an alternative payment method for things that you know you have to buy. This is one of the ways that I began. I usually had a monthly budget for how much gas I would spend, and I would use my credit card just to pay for gas. I already had that money budgeted aside for that, and that really helped me. The best, kind of the rule of thumb, is to pay it off in totality, even before your statement comes. That's something that my mom taught me. So also making all payments on time. As I mentioned below, making your payments on time is the biggest determinant in your credit scores, so that is really important. Staying kind of as how I mentioned before, staying below 30% of your credit limit, limiting the number of credit inquiries, especially the number of hard credit inquiries, and letting your accounts age. Those are all things that I have covered before, but they really do go a long way. And also checking credit reports and statements for errors, right? Credit card theft is a real thing. It exists out there. I've gone through it at sometimes, and so making sure that we're reading our statements to make sure that there's any unauthorized purchases is important, because a wrong move can negatively impact us. And reducing just general overall debt is also a good key practice, right? Okay, so let's go and talk about getting a credit card. So this is just kind of a caution I want to talk about briefly. If you're on the fence about whether or not to get a credit card, getting a credit card can be a bit of a risk if somebody doesn't have any emergency funds or savings saved up. Also, if somebody plans on living beyond their means or does not have an income or a steady income, also having risky spending habits can be a bit of a risk, or not having a set budget. So these are just some things to consider if anybody is on the fence about whether they should get a credit card or not. As mentioned before, borrowing money isn't free, right? And there's a lot of factors that can hurt our credit in a long time, for the long term. So it's good to weigh our options and consider if this is the right choice. Also, by the way, if you want to learn more about creating a budget or budgeting in general, you can join us on our webinar October 22nd at 11 a.m. or you can check out our Instagram for updates. But if you feel like a credit card is the right choice for you, so these are some things that you might want to look out for. All right, so first of all is no annual fees. So this is a yearly charge that you are added, right, for using a credit card. You can kind of think about it like a Netflix subscription, right, where we pay a monthly fee for getting those benefits. Annual fees are in a similar way, except that instead of monthly, they're done annually. But some credit lenders will waive those annual fees. Also, small credit limits. Usually, right, if you have less to spend, it's easier to manage. So that might be something that you might want to consider as well. No late payment fees or waive late payment fees. Usually, if you make a late payment, you will be penalized for it with a fee. The fees aren't usually, they're usually around $35, $50, right? But if you accidentally miss a payment, right, because life happens, it's nice to know that those fees can be waived, or you might not even be charged for any of those. And to avoid late payments, I think the best practices for that is establishing automatic payments or signing up for notifications on your phone or through your email. And also, maybe getting a credit card through your bank. You've already established a relationship with that financial institution, so it might feel a little bit more trust on both sides to be able to get a credit card through that. And on the right here, student credit cards and secured credit cards are some of the best options for students. So student credit cards typically have lower credit limits, and for some of them, you can even earn rewards. For example, if you maintain a GPA of 3.0 or above for a semester, you might get like a $20 credit limit or a $20 credit onto your account, right? I mean, who doesn't want to be paid for getting good grades? So I think that could be a good benefit of a student credit card. And a secured credit card is a little bit different. So a secured credit card requires that money be placed into a security deposit to be used as collateral. In the case that a payment is missed, lenders will be able to kind of take that deposit and keep it. So that is also another good option. And usually those also come with smaller credit limits. All right, so bonuses. So once you've used a credit card responsibly and achieved a good enough score, financial lenders are seeing that you're being responsible and paying on time. Some of these rewards might be automatically applied, or you can apply for them as well. So the most popular one is cashback. So you get a certain percentage for using your card. And usually you are able to use this credit to make your payments, or you can also get it deposited into your account. And there's also options for accumulating travel or miles, travel points or mile points. And that's something that you can redeem if, probably not right now during COVID, right? But if that's a lifestyle that you have or you are seeking to have, that can be something that can come in beneficial. And also one more thing that I wanted to add is that if your lender sees that you have been responsible with payments, they might offer an increased credit limit. And I just want to air a word of caution for this. That might seem something beneficial, but as I mentioned before in one of my slides, smaller credit limits are usually easier to manage, right? It's a lot easier to spend a lot of money when it's easily available than it is to spend a smaller amount of money. And if you're searching for cards, you don't have to do it alone. There are multiple websites that offer credit card selection and comparison tools. And so they can show you differences in interest rates, whether they have annual fees or not, whether they waive late payments or not. These are just some of the websites that can be useful for searching for credit cards and comparing them. All right, so lastly, just some resources. These are some general resources that I went over through in my presentations. Also, your bank can be a great asset and a great resource for learning more about credit or when you're seeking to apply for a credit card. So if you have that relationship with your bank, or maybe you know, they offer financial advisors, that could be a great resource as well. All right, so now we have some time for questions.
Thank you so much, Lupe. We do have a couple questions come through. So our first question is, do my student loans build credit?
So yes, actually, student loans do build credit. So when it comes time to paying back student loans, all of the things that we talked about today definitely apply. So they can be used.
Our next question is, can I get a credit card without a social security number?
Yes, actually, you can apply for a credit card without using a social security number. In lieu of the social security number, you use something by the name of an individual taxpayer identification number, or ITIN, ITIN, and you can apply for that through the IRS website. Not all credit lenders accept this identification number, but most major bank and lending institutions do.
Okay, so we had another question, which is lower interest rates are the better option. Is that correct?
So yes, lower interest rates are the better option, right? Because the lower the interest rate is, the smaller that fee for borrowing that money is. So technically, the less you have to pay back.
Another question is, I don't want to get a credit card and I'm nervous about debt. Could I still build credit without getting one?
Yes, you can still build credit without getting a credit card. For example, if you have student loans and you are paying those on time and being a responsible credit user, you can build your credit, but the process might be a little bit slower, especially when we consider that, right, lenders want to see a variety of credits being used. So that might be the only way that it might be a little bit impacted, but you can definitely build it slowly.
The last question we have is about store credit cards and if that's a good option to explore.
Yeah, so I think it depends. At the end of the day, right, it's a credit card is still a credit card. So you definitely want to take some of the things that we discussed into consideration. For example, what are their interest rates, right? Do they have annual fees? Do they waive payments or late payments or not? So those are some things that you might still want to look into and do a little bit of research on. But if it's a store that offers benefits that sound good to you, for example, if you do all your grocery shopping at Target, I know they have a red card, right, that offers you some kind of benefits or rewards, and that's where you do all your shopping. That might be a benefit that can bring you. So I think it just depends.
Thank you, Lupe. Those are all the questions we have at this time.
All right. Thank you, Victoria, for moderating. And I want to thank everybody for attending our Understanding Credit webinar today. I do want to remind you all that this was recorded and it'll be accessible on our website. Also, I want to shout out that next Wednesday, October 7th at 12 p.m., we're going to have a What is Food Insecurity presentation. And we're going to have a special guest from our partners over at Second Harvest Food Bank from Orange County. And also, before you leave, can you please take a couple seconds to fill out this quick feedback poll? And I just want to once again thank everybody for coming.